So besides mountaineering and trading, I think a lot of our viewers know you from writing the book, How to Day Trade for a Living. Could you tell us a little bit about that? What inspired you to write the book?
Yeah, so first of all, I have to say that when I wrote the book, and it was late 2015, I was not a great trader. I was kind of trading, but I was not a great trader.
Okay.
When I started trading, I wanted to learn day trading, okay, what it is. So I went to the different chat rooms, the YouTube channels, and started watching videos from a lot of people, a lot of big traders, good traders. And then I got inspired and said, okay, why not there is a book that specifically tells all of these details step by step for me. There was a lot of blogs, there was a lot of videos, but there was no step-by-step guide. And then as a PhD, I decided to write that book because that's what I learned as a PhD student.
Yeah.
Is as a PhD, they give you an unknown topic, and then you have to research about it. And then in research, you go through the literature, you see what is available, you propose the question, you do the experiment, and then you finish it by publishing your papers and thesis and defend it in front of examining committee. And then that book was very naturally was exactly the same process. I said, okay, I'm gonna study it myself. I did, and I said, okay, I found it. These are the tests. Okay, these are the charts. These are my examples. I used to have a blog that posts all of my trades in there as a journaling tool. I was using it as a journaling, and then I started writing it. And I wrote the first version was very small, and then I defended that. I published that, and now went to a YouTube channel, put the recaps and everything, and it turned out to be successful because first of all, I think it was a good right timing for it because everybody wanted to learn, but there was no good book. And then the second of all was that it was written by someone who was going through the pain of the learning trading themselves. If I was a big trader in Wall Street, I might have written that book differently because
then no one would understand
no
that
one
book.
would understand that. But I was going through the pain of understanding that what is this VWAP, what is the platform, or how do I put this moving average in there, or what's the point of this. So because I went through that, I think it was very successful, resonated with a lot of people. And because I self-published the book, I got the chance to update it a couple of times. That's also a big thing because if you go with the publisher, it's a little bit hard to get the updated versions out.
Oh, okay. Interesting. So I actually read the book many years ago. So recently I reread the book. I have the audiobook actually. So I re-listened to it, and I got a lot of insights from that. So knowing now what you know so many years later, because the first version of the book was 2015, you said. Yeah. How would you revise it? How would you update it now, today?
I think, and I am actually going to update it. I think what I would do differently is, in the book I was explaining about the strategies, and there are different strategies that I trade. In the new version, I want to emphasize more like building a trade book. And the trade book is a little bit more important than a strategy. Like opening range breakout is a strategy. But how you actually execute that and what are the criteria from a stock selection, from trade execution, from trade identification, and all of those stuff. So I try to put more elements of how actually you execute that strategy. So in my book right now, I explain the strategies, but I don't spend too much time on how to actually execute that.
Okay.
So I want to, revise it with more hands-on tips about how to actually execute that.
Okay, interesting. Yeah, so it's kind of like a step number 2 for the traders.
Exactly.
Step number 1 is reading the book as it is now, and you're providing step 2, like leveling up a little bit with execution.
More hands-on, exactly. Yeah. So you can explain to them the strategies forever, but you have to also walk them through examples. Like one section that I want to add in the new edition is actually to put my recent examples that, okay, this is step 1, this is how I found it, this is how I executed, this is how I made a mistake. So to show them more real life examples, like kind of the recaps that we're doing on YouTube, but in more written version that people understand step by step better.
Oh, yeah, I like that. I think that's a great idea, actually.
Yeah, I
like
think
the
that's
thought
good.
process, whether it's a win or loss from start to finish, how you planned it, especially. I think trade planning is probably the most difficult part to learn as a trader.
Exactly.
Yeah.
How many trade books you have, or playbook, people call it differently? Essentially, how many strategy do you trade?
I have, on the big picture, I have 5 or 6. And then a lot of times it's like variations of each one of them. Yeah, there are certain ones where I'll tweak the entry for a certain market environment, or if it's like a small cap stock, I might, have the entry a lot higher. But overall, big picture is the same. So I have around 6.
Do you have name for each of those strategies?
Yeah, I do.
May I ask?
Sure. I have one that I talked about on the channel called the gap up reversal long. So that one specifically for obviously stocks that gap up, and I'm looking for a reversal after it did the profit taking move. Another one, like the short side, I have this one called the extension short. The idea is in the name. When the stocks are really extended on the daily, I short it on the first red day. Yeah, that's like generally the big picture idea.
Very nice.
Yeah. So that's how I personally do it. I categorize them into different
It's very
books.
important. I think
Yeah.
people should give name to the strategies because it gives that strategy a character. So you actually treat it well. Like I have, for example, your gap up reversal is something that I call the double bottom reversal. So it's I'm pretty sure it should be the same because I'm looking also the stock gapping up. First drop, you see some sort of a sign of a strength, and then you try to catch that reversal. And it's amazing that, for example, two traders can see the same strategy, but they name it differently, they execute it differently, they put their own DNA and fingerprint inside that strategy.
Yeah.
And that's the beauty of the market.
Yeah.
Because you cannot follow another person strategy. You have to personalize it.
Yeah. Like you and I, we can hand people this exact same strategy we play. If that doesn't fit their personality or risk profile, it's not going to work for them.
Exactly.
Like they have to really get the big picture idea, and like they can take a piece and pieces like from you, from me, and then they tweak it so like it fits how they trade in their own style. Yeah. Or they may like trade the other side. Like when we look for the profit taking, they may take the short.
Yeah.
And we're down there looking for the long.
Well, that happens a lot in our community. Like Brian that you met, which Brian and I trade at the same time live. And sometimes one stock, we completely trade in the opposite direction. And at the end of the day or at the end of the session, both of us are profitable. Because it's very important that more than the direction that you choose, the trade management is defining if you are successful or not. Like I might short it for 5 seconds, he might take a long for a 5 minutes period, and at the end of the day both of us are successful. And that's amazing to see how one stock can give so many opportunities for so many traders.
As long as there's volume.
As long as volatility and volume. Yeah, that's very true.
Yeah, but there's more than one way to make money in the market.
Yeah, 100%.
So I think you're right. That's the beauty of this market.
That's why it's so exciting for me every morning. That it's just like solving a puzzle every morning. Like, okay, how we can figure out this thing of the market today, and I like that more than money. I like the mental challenge or stimulation. It's like gamers. Like I think especially day trading is very similar to gaming. A lot of the gamers are you have to press at the right time at the have to figure those steps, and that mental stimulation for day traders is very important, and it's also dangerous too because it can be like gambling.
Yeah. But I think most of all, I like the challenge, and like you said, it's like a game where you can be there trying to figure out the challenge, and then you almost instantly see whether you're rewarded or you're punished for it.
Yeah.
So like it's like I know it's not good, like instant gratification or instant loss.
That's
like
how
you see the results of your hard working, whether you were right or wrong.
That's how actually can be dangerous too. Gambling exactly like that. That instant gratification that you try to chase that high. But generally, I love the fact that you can get the result of your decisions in the matter of minutes. I like that. Swing traders, when they take a trade, you have to be patient. Investors, decades of staying. I'm not that person.
So you don't invest?
I do.
Okay.
Yeah. Well.
But you just don't look at it, or?
Well, some of my investments are in real estate.
Okay.
And some of my positions, the cash idle that I have, I bought an ETF right now, and I'm sitting on an ETF just for income generation. So I look at it, it's my account, but I just don't look at it. It's my idle cash. And here's the problem with day trading is as your day trading account gets bigger, it becomes a little bit difficult to beat the market. Like if you have a $5 million account, then you can't really you can day trade, but it's how much you want to make. You have to make $50,000 a day to become, but you have to put that money in work at least in an idle passive position.
Yeah.
So one of my accounts, I'm just buying and I have an ETF, just getting 12% a dividend from it.
I feel the same, but for me, I like to keep my trading account
Separate,
a manageable size and keep them separate. And I'm not saying everyone should do this, but I do this. I take the cash I have. I know people are always saying, oh, you shouldn't, like you should just manage it yourself, invest it yourself, but I don't want to because I know I like, my hands, I love to go in and out of the trades. So I give it to someone else to manage it.
How much is your trading account, may I ask?
In the...
Feel free to cut it out so later.
Six figures.
6 figures,
yeah,
yeah,
six
nice.
figures. Yeah.
So how much? Six figures or hundreds of thousands. Okay, not million. No.
No. If I do that, I think if my trading account is that big, I do stupid things.
Yeah.
Yeah. So I think I've come to realize that as a trader, I'm the number one biggest threat to my trading account. So it's also part of like, do I ever want to risk losing half of a $1 million account? Not really. So that's why I keep at 6 figures. It's still a significant amount to make enough money, but if I lose all of it, hope it doesn't happen. But if one day I lose my entire account, it's not gonna wipe me out. Do you trade with a 7-figure account then?
Yeah, my account is 7 figures.
Are you ever worried?
Well, last year I had a $2 million loss.
$2 million loss?
Yeah, because
I think I saw it in your YouTube video.
Yeah, I had a really bad. I was live in front of everybody. It's just, but I got some of it back from tax returns. So
okay.
I get $500,000 back from tax returns.
Okay.
That was good. So I didn't know the CRA wrote me a check. Oh, thank God. Yeah.
Oh my God, but that's a nice check. I don't think I've ever gotten that much return.
Yeah, hopefully you don't get that much.
I've never gotten anything back from. Okay. Cannot talk about CRA here.
No, but the good thing about the trading, I don't know how you do your taxes. My taxes are, the trading income is a business income for me. So over the years, because we do a lot. So you pay taxes, and then when you have such a bad loss, you can actually carry back to 3 years, and then you get it back.
Yeah.
So I got it back because in the last 10 years I paid so much taxes. So that was good.
I like how positive you are.
Yeah. Well, it was really hard. I mean, I closed that position in May 2022. Last year, May, almost a year ago.
Okay.
And it was really bad. I was feeling really bad, but I recovered most of it. So. Plus that $500,000 tax return helped a lot. So I kind of mentally moved on. But at one point I said, I probably better stop trading. I was really that bad.
Was it a day trade from one day?
It was a day trade that I turned it to a swing trade, which is the mistake that most of the people do, that you're not accepting the loss.
Yeah.
It just keeps going down. You keep adding to that, and then you eventually does that. All of my big losses have always been averaging down on a losing position. And the biggest one was the one that actually I just kept also overnight.
Do you remember? Of course you remember the ticker.
Yeah, it was TNA.
TNA.
Yeah, it's a leveraged ETF for.
It's leverage. Risky business, Andrew.
Weapons of mass destruction.
Oh my God, you can make a lot if it goes in your favor. But holy.
That's what I was exactly thinking. I bought it at the. I don't know, at the price that I bought. I was thinking if it goes up, then I'm set for life, like private jets and Lambos and everything, bring it up. But it just can't and it's always the opposite. It goes down.
Oh my God. Leverage ETF. Well, leverage what? It was
IWM is an index.
Okay.
You trade IWM?
I don't touch the ETFs much. Yeah. I use it I look at it as I trade individual stocks, but I try not to trade the ETFs.
So IWM is an index that is 2,000 microcap companies in there. And TNA is the 3 times leverage of that on a daily basis. So meaning that if IWM goes up 1%, this one goes up, 3% go up, and the vice versa.
Okay.
And the big one, the famous one is TQQQ.
Oh, okay.
So it's very similar. It's the same company that is offering that. So that one is tracking QQQ.
Okay. So you were long biased on it?
I was long biased.
Oh, okay.
And so I got that in there, and IWM in the matter of 3 months dropped 20%. So that means my
Yeah.
position dropped 60%.
Yeah, small caps got destroyed last year.
Yeah.
Okay.
And so that was I had a very big position. I had it was a $3 million position that I eventually closed it at $1 million, so $2 million loss.
Oh my God.
Yeah.
Did you plan on having, is that your regular size or is it after like you keep on adding?
No, I kept adding on that. It's a good
okay.
question. I kept adding on that. Originally, I wanted to have just $1 million position.
Just 1 million.
Yeah, I mean,
yeah.
it's doable. 1 million is not that crazy because you use margin. I use margin all the time for day trading. My positions, like on Tesla, for example, at today, I traded like up 6,000-7,000 shares, and it's
Yeah.
$200, near $200. So my position was worth $1 million. Of course, I use margin as well.
Yeah.
So you can go on 3-to-1 margin in interactive brokers.
Do you trade the actual equity or you trade options on these?
I do both. I recently got into the options. For the type of trade that I do, options are a little bit tricky because at the opening range breakouts, if you want to get to the options, you have to bring the option chain really fast. You have to be ready.
It's
and
very
then you select the
volatile.
strike, and then you have
Yeah.
to volatile, and then the spreads are bad. And sometimes buying the shares are much easier. But today, for example, I shorted the Tesla. And then I also shorted some calls, option calls as well, because I had time and the level was clear and everybody in the chat room was shorting it. And I said, okay, I'll short it as well. So both, but I'm mostly shares.
Okay.
And I know it's not very capital efficient, but I like that. I'm really good at doing it.
Yeah, I think that's also the reason I prefer shares. Like I thought about like dabbling into options, but I just like the fact that, it's easy to get filled.
Yeah.
When you're trading shares, like something like Tesla at the open, the volume is so high that you can get in and out really quick. Yeah. So after hearing what Andrew just said about stocks versus options, what's your opinion? Would you prefer to trade one or the other? Let me know in the comment section below. So you just watched a highlight reel. Make sure to learn from the full interview video over here. And if you enjoy these highlight clips, there are many more profitable lessons that you can learn for free from these experienced traders. Check this playlist right here.